I am currently shorting Tesla stock right now as I believe it is a bubble on the verge of popping. I've done a lot of research behind this, and before I'm attacked, criticized, and crucified by the cult of Tesla, I want you guys to take a second and really listen to these points out. Listen to the reasonings behind my decision to short this, as I did not come easy and did a lot of thinking behind this. I don't often short stocks, almost ever, and I hate to bet against Musk, but in this scenario, based on these valuations and reasoning, I believe Tesla is a good short option here, and is why I dropped over 5 figures into shorting Tesla. Let me know what you guys think and enjoy the video. Now, before we go ahead and jump into my short position of Tesla, let's go ahead and look at Tesla stock itself. Currently trading at $868 a share, a market capitalization of $835 billion, and a PE ratio of 1,743. We go ahead and look at Tesla for the year. It is currently up 820% for the year. Let's dive into that valuation a little bit more. Right now, Tesla is currently valued more than Berkshire Hathaway, Johnson & Johnson, Visa, MasterCard, Disney, and Netflix combined. That is absolutely crazy. And this is when Tesla was only 700 billion market cap. The amount that Tesla has gone up even this week alone, if we go ahead and look at Tesla, this past week, it has gone from $719 a share all the way up to $880 a share. That is a 23% increase. One of the days alone, Michael Berry, the Big Short guy, posted this.
So Mike Burry of San Jose, a guy who gets his hair cut at Supercuts and doesn't wear shoes, knows more than Alan Greenspan and Hank Paulson.
Yeah, Dr. Mike Burry, yes, he does.
Tesla gained more than General Motors was combined in one day of trading. Let that sink in for a second. General Motors is a giant, one of the biggest auto companies in the world. In one day, Tesla's market capitalization gained more than that entire company's market cap. It is extraordinary the amount that this company has gone up. And then it did it again and even more the next day.
How big's your short position right now?
So now that we've taken a look into Tesla's valuation, let's go ahead and look at my current short position on Tesla, which is currently sitting 32 contracts of call credit spreads, which is a bearish option strategy that says the underlying asset, in this case Tesla, will not rise above a certain price on a certain set date. So right now we have currently a lot of them. As you guys can clearly see, we have some for the March 19th expiration. Those are basically all in the nines, anything in the 900s. And then we also have a lot for January 29th, which is only 2 weeks away. And some of those we are in a little bit of trouble. We have the 820s, which are, within $10, and we have the 775s, which are already in the money. So we are already down on those.
Watch, it will pay. I may have been early, but I'm not wrong.
But we are expecting Tesla to continue to drop even farther. And if we have to, we will roll over our options. But I do see Tesla dropping even farther at this point. It's currently sitting at 810 right now. But I can definitely see it going down much, much farther. And I use this particular option strategy because I feel like it would be the most safe. Now, obviously, had I just bought puts upright, I probably would have made a nice profit today, considering the fact that Tesla, did go down a lot today. But I've been in this position since it was in the, low sevens. So had I bought puts then, I would have already been wiped out, a pretty significant amount. So by using this option strategy, it basically gives me time on my side that basically says, okay, you expect Tesla to fall, you don't know when, you can give yourself a little bit of time. So we give ourselves 3 weeks on these. It's only 2 weeks now since we are into the next week. And we're giving ourselves about 3 months or 2 months on these March 19th expirations. Essentially what we're saying is Tesla is going to continue to slowly fall or stay the same. We're going to hope it falls obviously under 775, so that way this call is out of the money and it can expire worthless. Now, my reasoning behind shorting Tesla, like I told you guys, I do believe it is extremely overvalued, and I believe we're going to see a big correction.
No one trusts you.
I
No one.
Several emails.
Now, a correction of probably about 25%, I'd say, over the next month or so. And I think that's pretty fair to say, especially based on the articles that I have read, the valuations, the amount of cars that they deliver, and what they're expected to deliver in the future. Now, obviously, I'm going to get a lot of flack for shorting Tesla because it is a very, popular stock, and a lot of you guys love Tesla, and that's awesome. But at the end of the day, we're here to make money. We're here to find the best opportunities, And I find Tesla a great opportunity to short. It's obviously a great opportunity to buy these past couple of months. I think it's a great opportunity to short now. And I'm willing to risk 11.5K on shorting it. And I believe we are going to be paid off on this. I feel like a lot of people who have already wanted to get into Tesla have already bought in. The big investors are already in. And, there's not going to be a lot of people buying up Tesla now. People are going to want to unload their hands, take some profits. If you wanted to get in Tesla, you would have already gotten in. If you're getting in now, you're honestly just a sucker, and you bought the top basically. So I can expect to see pretty significant volatility these next couple of days, either big ups or big downs. But I'm gonna expect a sell off of at least a couple more days. Probably get this thing to around 750 before it really cools down. But the floor is the limit, honestly. We're talking a company with a market capitalization of over 800 billion, with revenue less than net income revenue of less than $1 billion. And that's another thing. You go over here and look at Tesla's, valuation and how much they actually bring in. They don't bring in much at all. We look at an annual standpoint. This is last year. Obviously, they lost money. This year, they're expected to make about 800 million in profit. So you're talking a company that brings in only 800 million, yet is valued at 800 billion. It's a little ridiculous, and it's, a bubble basically. And that is the time you take advantage of these, and you watch these, and you can make some good plays on these. That's exactly what we expect to do. So that's my current short position. I want to show you guys a couple other things as well right now. Now, two other things we have to talk about when talking about any auto company is statistics and competition. These two things are what drives a company. When you have a lot of competition, that's a lot of market penetration and market share that is being taken away due to other vehicle companies. Now, another thing we have to look at is statistics. How much are these companies actually selling? How much are they making? How many vehicles are they delivering? Et cetera, et cetera. We go ahead and look at Tesla. Obviously, they delivered about 500,000, a little less than 500,000 vehicles last year alone. And these other companies have delivered significantly more, over 10 million each. Okay, so over 20 times the amount of vehicles delivered last year for Toyota and Volkswagen. These are the two other biggest automobile manufacturers in the world, and these are their revenues. We have Volkswagen at 282 billion, we have Toyota at 275 billion. We go ahead and look at Toyota. It's got a market capitalization of 250 billion right now. That is significantly less than Tesla. Tesla is valued at 3.5 times that. And yet if we go ahead and look at Tesla, how much they're bringing in, they only did 24 billion in revenue. Yet they are worth over 3 times as much as a company that is doing over 10 times their amount of revenue brought in. Now, another thing people are saying, it's a growing company, it's forward looking. All right, let's give them the benefit of the doubt. Let's say that they, increase by, 2 times. So they're all of a sudden, instead of delivering 500,000 vehicles last year, let's say they're delivering 1 million vehicles last year. You give them a million vehicles and an average price of 40,000 per vehicle. That's still only 40 billion in sales. Right now, Tesla's valued at over 848 billion, and that's when the market capitalization, or when the price is only 771. It's sitting at 810 right now. So clearly a lot more. The stock is a bubble, and a bubble is when sentiment or other market forces bid up the price of a security or asset, such as that it becomes divorced from economic prospects, free cash flow generating capacity. Guys, this is big, because you have to look at these things. You have to look at statistics. Okay, it's fine to say forward looking, and you understand that, and that can justify a P ratio of a certain amount, like a little bit over. But when you're talking about a P ratio of literally 1700 PE ratio, it just gets absolutely ridiculous at this point. And you also have to look at other things as well. What type of cars they're making. They have only 4 models right now. These other companies have tons of models, and these other companies are coming out with EV cars themselves. These are well-trusted, well-respected brands that have had loyalty for years, and now they're developing EV cars. The chances of people switching are not as likely as people expect. People expect Tesla to take up a market penetration of significantly higher every single year, and that's just unfortunately not the case. If we look at Norway, and Norway is an interesting country for auto sales because it has the highest penetration of EV sales of any country in the world. Its economy is also a free market with open competition among manufacturers for purchases and market share. So just like the US, except this is the best possible scenario for EV companies. Why? Because it has the highest penetration of EV sales out of any country in the world. We go ahead and look at this now. What do we see? Tesla is sitting at number 6 with only a 0.6% market capitalization, or market penetration, pardon me. So even in the best possible standards, the company is still not making the market penetration as they're supposed to, and as people are expecting. So when you look at this, when you look at, scenarios like this, it's easy to say, hey, the company is going to be the biggest in the world, it's going to deliver the most. But in reality, it's not possible. And in order to size Tesla's business products, you have to look at not only the size of the market segment that their vehicle targets, but also the competition. And there is a lot of competition right now. All of these cars are stepping up their games. They're making EV companies. They're making vehicles all electric that people are going to switch to. The odds of people just switching, like everyone expects everyone who's going to buy an EV car to switch to Tesla, it's just not accurate. And it's just not accurate because of the fact that there is so much competition out there, so many cars that are selling for significantly cheaper. Now, Tesla goes ahead and makes this $25,000 one, and they actually make it $25,000, not like when Elon said the Model 3 would be $35,000, the average cost of it was $54,000. They make something like that, okay, they're going to get a lot more market penetration. But time is of the essence. They still haven't even released that car yet, and other companies are innovating and already releasing their EV players. You have to, look forward, and not just look forward, forward-looking because, Elon says so, but you have to look at, pure stats and pure numbers. And if you look at any metric that, we have learned as investors over the years to look for in companies, unfortunately, Tesla is overvalued by every single metric known to man. And you can't deny that fact. You look at simple things like revenue, market cap, PE ratio, any of these, indicators, and the stock is significantly overvalued. It's not even close. It is so overvalued and so disconnected from reality that it's almost laughable. And, as you begin to cross off a list of all the vehicle market segments, Tesla is completely ignoring with its strategy, either because it's too small, too remote, or because it doesn't have the capital bandwidth to target the segments, because the competition, like I said, is too formidable, and because they're hybrid engines or because of these large SUVs. And that is why they are unable to compete with these other big companies. And it's why these other companies are going to take a lot of market penetration away from Tesla. So obviously it's not the pure thing you guys want to hear, is Tesla investors. I understand that, and I understand that it's annoying, and to see that people are bashing it, but you have a lot of gains. You should take these gains, because obviously a lot of people, like I said, like Michael Berry, are shorting the stock, and for good reason too. And they believe that this company is significantly overvalued and is going to have some significant downfall very soon. We've seen today a little 7.8% downfall. I expect a lot more. I expect this to continue to fall, and I expect to get paid off big on my short position. Guys, I'm back. I hope you guys are having a great day. Let me know what you think in the comments below. But just enjoy your day, and I'll talk to you guys next video. Take it easy, guys. Bye.
I don't know how to be sarcastic. I don't know how to be funny. I don't know how to work people. I just know how to read numbers.